I'm Don Tapscott,
And I'm Alex Tapscott.
and this is What's on Tap, this week's edition. I don't know, Alex, what's on tap? What do you want to talk about?
Well, there's a bunch of things that have happened this week that I think you're actually in a really good position to talk about. So today there was an op-ed from Bloomberg saying that in order for the government to deal with ransomware attacks, these are attacks where hackers, hold up companies or key infrastructure. They need to crack down on cryptocurrencies. And this is a common thing that we see from time to time, blaming the medium of exchange rather than the criminals that actually commit the acts of crime. But it actually highlights, I think, what I would call a growing trend, which is that, and that's something that I think was inevitable. The crypto asset industry is almost $2 trillion in size. It's being integrated now into, various large companies, institutions are buying it. Governments and regulators are becoming a lot more assertive around this. And that's not something that's necessarily bad, but we're seeing it manifesting in a number of different ways. Ransomware, Bitcoin being held up as the boogeyman on the tax issue, concerns about tax evasion. We've seen the Office of the Comptroller of the Currency's new director suggesting they're going to review all the policies from the last administration. The SEC is probably not approving an ETF anytime soon, something I think a lot of people were expecting in the US. And even Gary Gensler, someone who I think the Bitcoin community had a lot of optimism about, is appearing cautious. I think he's still positive, obviously, but more cautious maybe than expected. So this is all very interesting. I'm not sure if it all represents some kind of coherent strategy, but it just so happens that you and the research team at the BRI actually drafted a coherent strategy for the Biden administration to approach not only small discrete issues like tax and securities regulations, but holistically how the government should be approaching this technology. So if you were in a room with Joe Biden right now and you had 5 minutes to talk his ear off about how to approach this, what would you say?
Well, the report was called New Directions for Government in the Second Era of the Digital Age. And it addresses a bunch of issues, not just about the use of technology within the US government, but more broadly within the economy and within the society. And I'm not going to go into it all, but there were 5 big themes. One is we started with the case that the US should be the first country to have a self-sovereign identity. We argued that they should open up and change their attitude about blockchain, digital assets, crypto in general, and outlined a new direction on that. And there were a bunch of other big changes having to do with how to stimulate the economy, how to change the operations of government, how to change the nature of democracy, and so on. It's a pretty sweeping thing. And I have not yet heard from President Biden, but I'm with my phone is on here, and I'd be pleased to have a conversation. As for the issue that you raised, Alex, the regulatory infrastructure and environment in the U.S. is complex, to say the least. I mean, financial services regulation is this highly specialized business across all kinds of distinct regulators for securities, commodities, currencies, and all kinds of other things. And each approaches the activity from a very specific perspective, and it's created, I guess it would be kind to say, unclear regulatory environment, somewhat disjointed regarding what kind of compliance companies need to abide by. And you've got the SEC and securities, as you've mentioned, the CFTC, deals with commodities. Around currencies, you have FinCEN, the Financial Crimes Enforcement Network. There are various players in the Treasury Department involved in payment mechanisms. There's a whole issue of property and the IRS that treats convertible virtual currencies as property for tax purposes. And that's just the beginning. So what we argued is that we need a new kind of regulatory framework which is coordinated. And there were a whole bunch of items that we mentioned. This report, by the way, is publicly available at blockchainresearchinstitute.org. And first of all, we need guidance on digital tokens, and that's completely unclear. There should be clarification of custody of digital tokens. We need recognition of the power of provenance. Blockchains provide, this, as we've written in our books and so on, unprecedented ability to track and trace transactions by token or by wallet account. And unlike, cross-border wire transactions, blockchains preserve the provenance of financial transactions. But this raises a whole bunch of tough kind of regulatory issues. We need clarification on tax guidance. And this is a problem that exists in many countries where you do a token generation event, and the regulators say that's a security, and the tax people say that's income and it's a property, and we want to tax you on that. And on it goes. We need accounting standards. We need to streamline all this industry oversight. And the bottom line is what we argued is that everybody chill. That the regulators should not be charging ahead with any big draconian regulatory decisions until there's been a full collaborative process that involves all the key stakeholders in the industry. And one of the reasons we argued that is because there's just lack of knowledge, basically, amongst regulators as to what this thing is all about. Janet Yellen's famous statement, as she was quoted, maybe misquoted, about how, the main application of Bitcoin seems to be for criminal activity, which of course is just false. So this problem exists in the United States, but it's all around the world. And China, of course, recently has come down really hard on Bitcoin. So let's have a moratorium and an open discussion on this.
That sounds like a very sensible recommendation. I am often struck by just how important regulations could be to accelerating or potentially squashing a lot of innovation. Yeah. I mean, I think of cryptocurrencies as a medium of exchange. And, it's true that you can buy Bitcoin for one price and it can go up. And, if you decide to spend it, the regulators will deem that a capital gain. Well, if you bought 100,000 of Bitcoin and it goes to 500,000 and you're using that to buy a house, then I think that seems awfully reasonable. But if you have some Bitcoin and you go to buy a coffee or a video game or a subscription to a newspaper or something, it's $50, $10, $5. Calculating your capital gain tax rate on those purchases makes it basically unusable as a medium of exchange. And so changes like that, there is a bill that is kind of languishing in the House right now that would amend or clarify a lot of those rules around taxes. And I hope that the Biden administration is able to glean some insights from that and some of the other initiatives on the Hill.
Well, and in fairness to the regulators, it's tough. It's complicated. These are complicated issues.
For sure.
And you want to get the balance right between protecting investors and consumers and so on, and having a financial industry that has integrity. And on the other end, encouraging innovation in the economy. And if this is really the second era of the internet, then countries that embrace that and that transform their institutions around that are going to do better. They're going to have innovation and prosperity and jobs and more tax revenue and all the rest of that. Right now, the pendulum, in my mind, in most countries is way over on the how do we protect people and stop crazy stuff from happening. And there's crazy stuff happening. It's very high profile when it does happen, but that's a big mistake because ultimately it's going to hurt economies and it's going to hurt a country's citizens. I mean, Alex, like China this week, Bitcoin mining and trading, the government has cracked down on that, and that's kind of spooked the broader market. We haven't talked about this. What do you think about that? What's going on there?
Yeah, I mean, look, like China's banned Bitcoin 10 times in the past 5 years. That's a joke in the Bitcoin community. Yeah, it's no secret that China's not really a big fan of this, and they've sort of let the miners do their thing. But now they're cracking down on the miners as well. And honestly, I think It's probably a very good thing for the crypto space. Two of the main criticisms of Bitcoin are that too much of the hashing power, in other words, too much influence over the network exists in China because of the miners there. And also that Chinese miners in some parts of China use a lot of fossil fuels. So, if more and more hashing power moves out of China because that government is not open-minded about it,
Yeah.
then that's actually a really good thing for the long-term viability. It means probably that the network becomes decarbonized faster. And it also means that the hashing power is going to move towards open societies and democracies rather than being in China, right? So, critics will always find something to, try and pin on Bitcoin. But if anything, that's probably short-term pain for long-term gain, in my view.
Yeah. So other stuff in the news, Circle raised $440 million. This is like real money. Andreessen Horowitz, I see Mark Andreessen all the time on Clubhouse.
Yeah.
I think they have an interest in it, but he's just in there yakking away on all kinds of stuff, generally with interest.
I think it's because Andreessen Horowitz is a big investor, and he knows that by being a model user of the technology, maybe he can help his investment out as well.
In general, that's a good idea these days.
Yeah.
You invest in the technology, you got to use it.
Exactly.
But they've got a third crypto fund. It's like $2 billion.
Yeah.
And 5 million ETH has been sent to Ethereum 2.0's deposit account. It's mind-boggling every day, the stuff that's going on. Do you want to say anything about any of that?
Sure. I've got a copy here of Blockchain Revolution because I wanted to find the excerpt on Circle. Because Circle was, Jeremy Allaire, the CEO of Circle, is someone who we interviewed for the book and, remained, a close friend of the firm. And, basically one of the things that he wanted to do at the outset, he said he wanted to be the Google of financial services, basically. And that would be employing, crypto assets and whatnot. And Circle has got a bunch of different interesting business units in its firm, but really it found sort of the perfect product market fit less than a year ago when it launched USDC. So that's its stable coin that in a very short period of time has gone from, a few hundred million or from zero in effect to $20 billion of value. And as we know, stablecoins are one of the more interesting applications of blockchain because they have all the same frictionless, peer-to-peer, immutable qualities of a crypto asset, but with the stability, so to speak, of a dollar. And it's possible that stablecoins, as they scale the way Circle has, could come to displace a variety of different payment rails. Right now, they're used primarily as a medium of exchange within the crypto asset industry, to buy NFTs, to stake, to different kinds of platforms as a way to buy cryptos and so forth. But down the road, we know the story of how people send money overseas to their families, or how banks move money between themselves in the correspondent banking system. And there's a lot about stablecoins that, frankly, is just much better. The Fed's ACH system, that's wire clearing system, is like 40 years old. Stablecoins can do what that system does with way less cost and way more speed and convenience. So, I'm sure Andreessen I think Andreessen's in this round, but I'm sure that the backers of USDC and Jeremy Allaire himself, anticipate that stablecoins are seeing their product market fit with early adopters in crypto, but there's really no end or limit to what they could ultimately achieve. Now, we're also in a period right now where crypto companies are priced for perfection, as they say, from a valuation standpoint. And obviously, you might as well make hay while the sun shines and, bring on that war chest to help build your business when the money's available to you. On the Andreessen Horowitz, speaking of war chest, $2 billion for a crypto fund is a lot. I remember when A16Z launched their crypto venture capital business, one of, I think their first fund was, $200 or $300 million, which even at the time was sizable by crypto terms. Now that's not barely that much. But $2 billion, that's a lot of money to be devoted towards a specific category of the, technology ecosystem. It would be like a $2 billion, cloud or SaaS fund. I mean, that would be enormous if you think about it in terms of like a segregated category. So again, just more signs that the really smart money is, doubling, tripling, quadrupling down on this space. On the ETH thing you mentioned,
what's in that fund? I haven't dug into that story yet. What kind of asset?
It's mostly, well, the third fund I'm not sure, but the other funds are largely investments into crypto assets themselves, but also investments into the private companies. Some of these protocols, there's a public protocol, which is the crypto asset, and then there's a corporate entity that is building applications or supporting developments in that ecosystem, what have you. So they have made investments in some of those entities, but also into the underlying crypto asset themselves. And it's interesting. So it's sort of a hybrid between VC and a hedge fund in a lot of ways, because normally when you put together a venture capital fund, you're looking at a term of 7 to 10 years sometimes, and not having clear visibility in terms of a liquidity event for many, many years for most investments. With crypto, we know that some of the early private rounds can be converted into a publicly available liquid token within a matter of months. So the path to liquidity is much higher. And so you can turn and churn the portfolio a lot more than you can with a traditional venture capital fund. So again, just another kind of innovation in this space.
How about Ethereum? Like, what's going on? This is a lot of money.
I think
5 million ETH.
Yeah, I think it's like $13.5 billion, which seems like a lot of money, but relative to the size of the Ethereum network, it's still 5%, I think, or maybe even less. Still, it's very interesting to see this. So, like high level for the folks who are listening, maybe aren't familiar with this, Ethereum is a proof of work blockchain. It has miners which use large compute power to validate blocks that get added to the ledger of the blockchain. They're moving to a proof of stake as part of their ETH 2.0 upgrade. Part of that is this deposit contract. So the way it works in effect is that you stake your ETH to this contract, and you can earn a return. And so the idea is, rather than the miner earning a return from the new ETH that's created, you as the validator get to earn a return for locking up your ETH to the network. And this is something, that's very common for proof of stake networks. But the difference here is that, if you're on Cosmos or Polkadot or these other ones, you can lock up your ETH, and if you want to unbond it, you want to take it out, maybe sell it, do something else with it. I'm sorry, your ETH, I mean your dots or your atoms. Yeah. It takes 2 weeks, 3 weeks, whatever to do that. With ETH, you've got to lock it up for almost a year. Maybe a year and a half. And that's until the next upgrade comes along. So it's just an interesting data point, that to me is very positive for the Ethereum network. What it essentially shows is that there are some large holders who are prepared to stake their ETH for the very, very long term with no clear, these milestones have been delayed, so this one could yet be delayed again. They're doing it for the sake of the network to achieve this upgrade, which I think everyone thinks is required for it to reach its next stage of potential. So I think that's very exciting.
Well, and it should help with the volatility of the network too. If you have this big base that's staking, and they're not going to be withdrawing it depending on the vicissitudes of the market. I guess the other thing it's good for in general is proof of stake is, of course, a better consensus mechanism in terms of the environment, and that's emerged as being such a big issue right now.
Yeah, that's for sure.
What else have we got?
There was something I wanted to ask you about.
Yeah, sure.
Which is that things are, humming along here, but we saw some other interesting headlines, which is that Microsoft has decided to retire its Azure blockchain, and we've seen IBM's also cut back on its blockchain as a blockchain initiative as well. So, what does this all mean for enterprises and blockchain? Are they really taking a step back, or is this a pivot?
Well, it's interesting what's happening. So, and I think the market is interpreting a lot of this wrong, that somehow they're backing off their blockchain strategy because the market isn't there. They're backing off because it's not working. IBM was totally focused on Linux. Now they've got a whole new set of personnel in there. A key guy is named Kareem Youssef, who is organizing blockchain, but it's within a broader context of other technologies at IBM, and rather than just pushing, it was sort of the view for some of these companies that, yeah, we're a software company, we're going to create Outlook, the equivalent of Outlook, only it's going to be a blockchain, and that's what enterprises are going to use. That's not the way it's going down. Enterprises are going to use these publicly available platforms. And sure, there are lots of them right now, but increasingly they will come together, just like in the early days of the internet. All these proprietary intranets came together as well. And for IBM, it's quite interesting because it's like blockchain is part of a cluster of technologies. The term that we've been using at the BRI, we haven't exactly run this up the poll to see who salutes too high, but we will be. And that's the trivergence of AI, blockchain, and the Internet of Things. And if you think of a diagram of trivergence, in the center is data, because all of this stuff is generating data, and AIs use the data, of course, to be able to learn and do things that they weren't previously capable of doing. But all of that is sitting on a cloud increasingly too, because, and for somebody who's been around like me, this is like what goes around comes around, what comes around, whatever it is. That, way back in the early days of computing, companies didn't really have their own enterprise computing. They used timeshare because computers were so expensive, you could only rent part of a computer that was running in some other facility. Then we had this big shift towards enterprise computing, the rise of the all-powerful CIO with multi-billion-dollar budgets, and companies build their vast data centers. And now that's shifting back to the cloud. And, I'm pretty convinced that the cloud is going to deliver trivergence, these services that will run on this publicly available capability. So you think about blockchain very differently in the enterprise. You think of it as a service, but also as something that's combined with these other capabilities. Like take AI, for example. AI is not going to run on some supercomputer in your data center. It's going to be distributed. And there'll be little bots, trillions of them running around doing all kinds of things, analyzing things, checking out customers, a light bulb will purchase some power from a distributed power source and pay for that. And when it pays promptly, its reputation will be enhanced as a trustworthy device, and the device will learn, and the power source will learn, and this is what AI is going to shape up. By the way, I speak with some confidence on this matter because I personally ran on a project on decentralized AI. And that's now publicly available also at the Blockchain Research Institute. So this is not big enterprise providers turning away from blockchain. It's understanding, as always happens with these big new innovations over the years, that you need to be able to adjust and pivot depending on how the market and how the technology is evolving.
Well, there you go. And you know what? We see a lot of big enterprises simply shifting more of their attention towards those public blockchains that are being developed by tens, hundreds of thousands of people. These ecosystems similar to the first era of the internet. Yeah. And it's those kinds of platforms that I see kind of tying into that trivergence. It's not some closed proprietary system that's built inside of a company.
So for those listening, write it down, trivergence. You heard it here first. It can be a verb, triverge, like converge. It can be a gerund, triverging, or is that a participle? I don't know. Anyway, it's a neologism, and I think it's a good one because these are the three technologies that are coming together. They're creating and using data, and they're running on a cloud platform.
There you go. I think we're almost out of time here. Is there anything else that you wanted to talk about? I know that there was a big announcement from our Korean partner, Bosagora.
Oh, yeah.
Tell us about that.
Yeah, this is pretty cool. So Bosagora is a a blockchain platform in Korea that's a very capable platform. It's kind of snuck up basically on some of these other platforms that exist. And they have a management team that's got a rather bold vision, to say the least. And they're working with some government leaders. They're very well connected with the regional and local governments over there to create a metaverse based on blockchain. And they're arguing that due to the pandemic, there's increased interest in virtual worlds and people coming together to not just to meet each other, to date, or to do transactions or whatever, but really to govern themselves and run many of the functions of society. For example, to have political debates, to vote, and to do all kinds of stuff. So they're working with a couple of local governments there. They created this thing called the Meta City Forum. And but full disclosure here, Basagora is a member of the Blockchain Research Institute, and they're now our partner in creating the BRI in Korea. So we're going to be collaborating with them, and I will be personally collaborating with them to help spec out this whole metaverse vision. And the very first thing to do is to create a meta city around one of the sort of medium-sized cities in Korea, where a lot of these activities will be happening. And the local government and the mayor is participating fully in this. But where's it going to go? I'm not really sure, but it sounds quite juicy to me. So I'm looking forward to it.
Oh, we'll be tracking it very closely. And maybe we can have one of the folks from Bosagora on a What's on Tap episode to talk about it at some point in the future.
Yeah, that's a sort of interesting idea. And with people who are listening or watching, we're having fun just rapping between each other. But we're also thinking about bringing on some major people onto What's on Tap and doing some real fast-paced kind of interviews with them. Let us know what you think about that. If you think it's a good idea, who are some people that you might like to talk to? Alex, I guess Mark Andrews might be a good one, in addition to the Bosagora friends.
Sounds good. All right.
Okay, well, thanks. That's What's on Tap for this week. We'll see you next week.